Hey everybody, it's Bob Mortgage, and here's this week's mortgage report. If you're in the market to purchase a home, give me a call at 214-631-5626, or you can apply online at BobMortgage.com. Last week was a pretty light news week. We did get reports that the New York Fed President, William Dudley, will end his term early and retire in mid-2018. Now, no details as to why he's retiring early, but he is a close ally of Janet Yellen, and Yellen is being replaced in February by current Fed Governor Jerome Powell. And don't forget that the Fed Vice Chair, Stanley Fischer, resigned in mid-October. That's the top 3 individuals in the Fed stepping down or being replaced. The Fed's going to have a whole different look coming up in 2018. Lower rates, anyone? Now, CoreLogic released a bunch of home price numbers last week, but the big one I looked at was their home appreciation forecast. They're known to be very conservative with their estimates, and they forecasted that homes will appreciate 4.7% in the year going forward, which is pretty solid. We also saw the Senate unveil a tax plan that would cut the corporate tax rate and make tweaks to the individual tax system. These are now 2 separate tax plans going through the House and the Senate, so you can check these out on the chart and compare. Now, one difference between the two is that the Senate plans to keep the $1 million mortgage deduction as opposed to reducing it to $500,000. That sounds good, but since the standard deduction is going to double in both plans, only about 4% of individuals would actually benefit. Now, from a technical standpoint, mortgage bonds are trading down. We went into the last week carefully floating, and by midday Tuesday, I began taking a lock position. Clients that were not yet covered, meaning they were in a floating position, I converted to a lock position to protect their interest rate. That was a good decision as we saw bonds break beneath the 100-day moving average and basically free fall. Bonds fell beneath the 25-day moving average, the 102.8 resistance level, and the 200-day moving average. Since we fell to another resistance level at 102.4 and bounced off, I'm going into this week carefully floating. I've always maintained a lock at the top and float at the bottom of the range position, so I'm going to watch the opening on Monday very closely as we lead into a busy economic calendar beginning on Tuesday and continuing through Friday. Look, I've been a mortgage advisor for over 20 years and have been blessed to have provided financing to over 25,000 families. I watch the markets to make sure I can get you the right home loan at the right price. I'd love to help you with your home financing options. Give me a call. With Bob Mortgage, your dream home is already within your reach.